So this is what you're looking for. You're looking for a loan officer, because a loan officer that has access to many banks is going to help you get pre-approved when maybe the bank you're most familiar with is not capable of giving you an approval. Now, listen, you can't take it personal. Banks are dealing with millions of people, and at the end of the day, it's just ones and digits, and they like some ones and digits better than others. There are some banks that'll work with low credit ratings and other banks that won't. There are some banks where they'll say, well, you make a lot of money, but it's stated income and it's not reported as a W-2, so we don't like you. And this other bank says, we'll do stated all day long. So understand this first and foremost, that people can get so discouraged in the lending process, and you got to toughen yourself up and get some elephant skin on there and just not let that bother you so much, okay? And the reason why is because there's all these banks, and if you give up, you'll never know what you were really capable of and what you really could have done. Here's what banks are going to look at. Number one, debt to income ratio. They're going to look at what are your ongoing monthly obligations that you owe people for, like, well, you owe on this car rental and you owe on this and you owe on that student debt. And then they want to know, how much leftover income do you have after you pay your bills? Oh, that will produce a debt to income ratio. How much debt do you have versus how much you make? And that's something that they're going to look at. They're also going to look at what you have for a down payment on a property. If it's a home for you, I love taking advantage of the 3% and 5% down payment programs. You know, on a $200,000 house, 3% is $6,000. But investor lending, you got to put 20% down. 3% versus 20%, right? So 3%, that's awesome. That's smoking hot. I can take, you know, if you buy a house with $40,000 of equity and you put $6,000 down, when that deal's done, you're going to walk away feeling like a hero because you're going to make a pile of money. They're also going to want to know, is this for you to live in or is this an investment? Because those are two very different banking systems. The lending rates and the things that you get when you're buying a home for you is more lenient with generally lower rates than buying an investment property. Because the bank will say, what's higher risk? Kris living in a house or Kris putting someone else in the house? If it's an investment property, it's higher risk. Your interest rate may be a full percentage higher, 1% higher, 0.5% higher. All of those things are what the bank's looking at, including your hidden assets. 401ks, IRAs, any money that you have in equity in other properties, money that you have in savings. And bank's going to want to know, if you put a down payment, you're going to have a little left over in the bank. You're going to have 3 to 6 months worth of payments still. Those are all the considerations that are happening in the bank size. Now, before you go find a loan officer, I want to share 2 very important things with you. Here's the first one. You need to have your debt to income ratio, which means the money that is forcibly going out every month for obligations, generally can't be more than 50% of how much you make. If it is, you're probably not going to get approved. The second thing is credit score. You got to have a credit score generally 680 or 700 or 720. Some banks will work with you at a 620 credit score, but if you're in the 500s, then you need to use the alternative bonus that I'm going to share with you a little later. So you got to do some credit repair. You got to get your credit maintained and up a little bit. And down payment. You got to have enough for the down payment, whether it's 20% or 3%, as well as 3, 4, 5, 6 months worth of payments in the bank. So let's say the mortgage are going to be $800. The bank might want to see that after your down payment, you still have $3, 4, 5, $6,000 left over in the bank. They're like, whew, something happens, you lose your job, you got a couple months before you get your next job, and you can still make your payment, and we as the bank, we're not going down for it, okay? Now, if you're not in, so if you do fall into that situation, the second piece of advice I have for you is, how do you find a good loan officer? Okay, this is very important. Find a successful loan officer. Successful means they do lots of volume with lots of banks, okay? This is really important. You can't go to the brother-in-law that's the loan officer here. They can help you, but if you want to be helped the most, you got to go to the most successful loan officers out there that every month do sign on many loans. You're looking for one that is at least doing at least 5 or 8 loans a month. And that means that they have experience. If it's investment lending that you need, not your primary residence, then you need to find a loan officer that specializes in investment lending. So how many deals are they closing a month? And number 2, how many different banks do they work? Well, we really have just 1 or 2. Oh, we've got 10 or 12. Okay, the one that has the most volume and has the most banks is going to be able to open up the most doors for you. Now, that's what you do to get pre-approved. Now, where do you find loan officers? That's easy. It's this really cool new technology called Google, which is super, super cool. You just Google and start looking around and ask some people, post it on Facebook. Anyone here know, on your social media, anyone know a good loan officer? And then you can call and interview them. How many banks do you work with? How many deals are you doing a month? They're gonna feel that that's a little bit invasive, but it's all fair for you to understand that information so that you can pick the right person to work with. So friends, that's how you get pre-approved on this. The last bonus piece I want to give you is, what do you do if your credit is maxed out or if you have bad credit? Listen, do not associate your self-worth or creditworthiness with just your credit score alone. Exceptions happen, bankruptcies happen, divorce happens, life happens, job loss happens, and sometimes people will allow one or two of those moments to define their creditworthiness for the rest of their life. I'll tell you right now, I have good credit, but I have good credit starting from a place where I didn't have credit at all and I needed to build it. And there are times when my credit score dropped because I had a lot of real estate and then I brought it back up. If you're determined to do real estate, there's only two things that'll stop you. You don't got the credit, you don't got the money. If you got those two things, go out there and crush it and blow it up. But if those are getting in your way, I want you to click the link here, come to my website, because I'm going to tell you right now, never allow a lack of credit or an overuse of credit to keep you from doing the deal that you're supposed to be doing right now.